Thank you very much, Ms. Polius, for so ably conducting the first panel of discussants. We're now going to give our attention to the second panel. It's entitled Landscape of the Eastern Caribbean Currency Union Post-COVID-19. In order to introduce the panelists for this second panel, we'd like to first of all introduce the moderator. And like her predecessor, she has the dual responsibility of not only introducing the panelists, but she also will be moderating the session. This is in the form of Dr. Valda Frederica Henry. Valda Frederica Henry is the Deputy Governor of the Eastern Caribbean Central Bank. She's the VF Inc.'s former Chief Executive Officer and Principal Trainer. She formerly served as a Senior Investment Officer at the Eastern Caribbean Central Bank and played an instrumental role in the restructuring of the investment unit and the development of the investment management framework of the bank. She has lectured in, among other subjects, human resource management and accounting, and has extensive experience in organizational reviews, job analyses, and job descriptions, working with companies in the Caribbean, and served as the coordinator of the Administrative Reform Program of the Commonwealth of Dominica. She has served as a mentor for executive and middle managers in many sectors, including banking, hospitality, and utility. Valda is also a global human resources and organizational development expert who excels at collaboration with very strong interpersonal communications, leadership, and decision-making skills. She has developed and led numerous multi-year personal and professional development programs for youth in Dominica, as well as individuals and businesses throughout the Caribbean. She hosted a weekly radio and twice monthly television programs on which she discussed solutions to challenges faced by businesses in the region. She wrote a column, Business and Life, for the online newspaper Dominica News Online. Valda holds formal qualifications in financial analysis and planning, governance and business management. She's a chartered financial analyst, holds a PhD in Industrial Relations and Business, Masters of Business Administration, Bachelor's in Management, and Bachelor's in Law. She's a certified global professional in human resources, Society for Human Resource Management, senior certified professional, and an accredited director. She is also a certified ProNet trainer and a Myers-Briggs type indicator practitioner and a certified Train the Trainer for InfoDev and the Women Innovators Network in the Caribbean. It is my pleasure now to introduce to you Dr. Valda Frederica Henry. She will, as I said before, be introducing the panelists and also moderating the session. Dr. Henry, you have our attention.
Thank you so much, Kevin, for the introduction. And thank you to all of the participants for their participation at this the conference so far. I've missed most of it, but from the tail end that I got, since I was at another meeting, it was like a very vibrant discussion. So I will certainly go back to look at the presentations that I missed this morning. Our next panel on the title being Landscape of the ECCU Post-COVID-19. And we all know the impact of COVID-19. But as we move forward, so yes, we've known it, but now, well, how are we going to move on? How are we going to thrive post-COVID-19? And to give us some insights, we have two panelists, Ms. Joanna Charles and Mr. Belfield Phoenix. I always have it upside down, but I'll get to it. And they're going to share with us some insights on how do we thrive and navigate COVID-19. You know, everything comes back to how do we transform our region going forward. So I will read the bio of the two panelists. Each panelist will have 20 minutes for their presentation, and then we will have a 30-minute discussion. So please have your pens, your paper, your computers, whatever it is you need, so you can take your notes, make your questions, make your comments, so that you can participate in the discussion segment. Our second panelist, Mr. Phoenix Belfield, is an economist, entrepreneur, and credit union activist, recognized as one of the most prominent voices advocating for credit union growth and development, recognition, and financial inclusion. He is the general manager of the Dominica Cooperative Societies League Limited and the CEO and founder of M. L'Argent Wallet, a financially inclusive mobile wallet platform aimed at future-proofing the credit union movement by providing cutting-edge digital technological solutions for the movement and its members. Belfield also chairs the working group of OECS leagues and credit unions. Belfield is the host of the popular weekly radio and social media program, The Cooperative Voice, a program highlighting the contribution of the credit union movement to the national economic development and matters of interest to the membership. I now hand over to Phoenix Belfield, who is going to present to us on the very same topic, the landscape post-COVID-19.
Thank you very much, Deputy Governor. Just testing that my audio is well received.
I can hear you loud and clear.
Okay, let me just share my screen. All right. Okay. Is my screen properly shared?
Yes, it is.
Okay, wonderful. Well, thank you very much for the privilege of speaking with you this morning. And it is often a privilege for us, the credit union sector, but part of a large and responsible gathering of financial institutions to actually be in a forum such as this. And it is really kudos to the leadership provided at the level of the ECCB. I remember the first time we were invited to speak at what was then the Bankers Conference. I think that would have been the last of the Bankers Conference. And it has since evolved in a truly inclusive way and manner into the Conference for Licensed Financial Institutions. So this morning, in the few minutes that have been allotted by the chair, I would like to share with you in the context of the ECCU credit union sector on the opportunities, risk, and challenges on the way forward. When we speak of the credit union sector, we oftentimes have to look at from the context of why the credit union matters. And we often find ourselves having to explain our raison d'etre, or the reason why we exist, and to reiterate the purpose for which we were created. So I use this analogy of the cow and the egret to really emphasize the symbiotic relationship with the credit unions and the regulators, banks, governments, and private sector. And really what it tells us is that, listen, we can all have benefits from the commercial space without having risk to each other. And like the egret and the cow, it is something that has always fascinated me. How can the cow stand these birds picking around them and getting into their way? But they're actually serving a critical purpose. And this really leads us to understanding the purpose of the credit union sector, because before you can understand our plight, understand the situations that we're faced and how we are making doing the sector, I think we need to understand why we came into being. And like the egret, we serve a critical segment of the population that is underserved. You would have heard from the governor about the access to accounts and how difficult it is in some jurisdictions for the average person, the mom and pop shop, to have a business account at a financial institution, or the average man on the street to open an account at a financial institution. And that is where we came in over 60-something plus years ago to serve that underserved population, and particularly those young persons that are being served. We have, if you look and you really want to understand the context of credit union and why we matter, you do not need to look any further than, for example, in St. Patrick. You can look at the St. Patrick Credit Union in Montserrat. You can look at Liberty Credit Union and what they're doing in Anguilla, very small credit union. You can also look at Hermitage Credit Union in Grenada, or you can even look at St. Mary's Credit Union in Dominica. And you can understand the critical role that our small credit unions are playing to provide financial inclusion and access to the underserved. So really and truly, in understanding the symbiotic relationship between us and the regulators, it is a matter of coexistence. And we believe, like I would tell my colleagues in the banking sector, we compete, but we complement. And together we have this higher calling or responsibility to improve financial access and access within the sector, and grow the space within the confines of regulations and so forth. So I just wanted to preface that discussion so that the people who are here can understand the reason for which the credit unions were created and why we continue to evolve as a sector. Now, in terms of the EC jurisdiction, we have an asset size, and this is in terms of US billion, 1.725 billion across the 8 jurisdictions. We have membership in terms of membership accounts, 413,000 membership accounts. We have savings totaling $1.4 billion and loans of 1.17 billion. So, and these are not commercial loans. These are loans in the retail sector. These are loans of the average guy on the street that wants to open an account and wants to fund his education, or wants to provide healthcare for his family. These are the small agricultural farmers, those persons in the small SMEs, those in the services sector, that we continue to provide hope and help them to achieve their dream by providing financial access. I was actually recently asked by an international organization as to why is it that the credit unions are growing in terms of importance and their value proposition to the membership increasing. And I'm saying simply because we find a way to reach our membership at a point of greater need. And that is why, even in spite of the fact that we've seen consolidations in the sector, the people are still understanding the credit union ethos, and they are going to the credit union to provide that level of financing. Of course, for the commercial side, our commercial partners, the banks, provide already commercial loans in that area. But in terms of the credit union sector, some of the opportunities that present itself within the EC jurisdiction, and one of the things that we've learned even here in Dominica and also within the OECS space, is how the credit unions have typically been the first responders in a time of a pandemic. And we're actually playing a critical role in driving the recovery process of the financial sector. Now, some of the areas that are going to be open up for us, and my fellow panelists mentioned about not letting a disaster go to waste. We have seen from the advent of Hurricane Maria and Dominica's push to become the world's first climate resilient country, and our focus on green technology and investment and innovation and digitalization of the economy, we're seeing increasing opportunity in green investment. And it is now for us as a sector to really look into it. We're working collaboratively with our strategic partners, the OECS, the ECCB, to see how is it that we can have a more robust green investment portfolio, because we have the things free at our cost. We have brilliant sunlight. Let me the impact or the footprint of solar panel usage in the Caribbean and within the sub-region OECS space is very limited. There's also the instance of digital adoption. How do we increase our digital footprint as credit union? In fact, it is proven that it is 10 times cheaper in branch services to members as against mobile services. And so how we adopt the digital technology? How do we digitalize our processes? How do we provide online access for our membership? Is going to be critically important as we drive our strategic vision going forward. Again, I mentioned earlier about the SME sector, a critical, small but critical ingredient, because we believe that the private sector is the engine of growth of development of the economy. And the small businesses of today will become the large businesses of tomorrow. So for us, it is important how we continue to engage that SME sector. And that is why over the next couple of months, we have seen our credit unions have been focusing on providing training to the small business entrepreneurs, finding out from them how is it that we can serve them better. And we're now working on a different suite of products to be able to provide them greater levels of services, financial services. Again, this ties into the access to financial services at the credit union level. And I could not have said it any better than the governor said. And I can sense the passion with which he spoke, because this is an important facet of our life within the OECS space. And that is why the credit unions continue to be a major financial inclusion partner for the government, for the private sector, for the mainstream financial institution, to plug that gap, that critical gap, in ensuring that all our citizens have access to financial services. And there are the two other areas that were mentioned earlier, the access to partial credit guarantee scheme, which is really of importance to us, because we have a unique situation. For example, our Kalinago brothers have lands that they do not own. And this is by legislation. Now, they cannot use those as collateral to be able to access loan at the financial institution. So how can we help that? And this is an area where, and that is why we've been lobbying along with the CCC, or Caribbean Confederation of Credit Union, and we've been speaking to the ECCB and the ECPCGC as to how credit unions, not only banks, how credit unions can have access to that. Because we are the financial institutions that are where the members need the most. And we need to be able, if you exclude us from this critical mechanism, you're excluding a large segment of the population. So I was really heartfelt and I really feel very warm that the overtures of the ECPCGC that we continue to engage, and we are hopeful that by the next session that we can have access, and you can report that the credit unions are also part of this. And then the other section related to the credit bureau services. We're seeing how, in an effort to manage the risk on the credit union side, how important it is to have a credit scoring mechanism. Because right now, how it is done, we have to, if a member needs to get an account, they have to walk around with a couple of sheets of paper, and they have to go around physically to each other credit union or bank or other MSBs to get credit reports, and then to bring it back to the credit union. How a significant savings that will be when the credit unions will have access to the credit bureau services, where we can simply look up the credit score and be able to expedite the access to financing for those members. In terms of the risk, we face pretty much some of the same risks that are faced by the mainstream financial institution. We have the instance of the regulatory environment, or we look at capitalization, forbearance, and the different regulatory pressures. And we have been at pains to explain to our membership why is it that the regulatory environment is changing and evolving over time? Because they have come to know the credit union as their village bank, as their social bank, as we say, or the poor man's bank. And all of a sudden, the credit unions are now asking them for the name of their we say Pawe and Nene, their godfather, the name of their pet, and all of that. And these are some of the regulatory pressures that all financial institutions are now having to grapple with. We also face the instance of increasing liquidity risk. How can credit union improve its funding sources so that it can avoid runs on the financial institutions? So this is something that we've been even talking at the level of the movement as to how we can use the liquidity of the larger credit unions to offset some of the liquidity concerns of the smaller credit unions. We've been looking at and this is very, very area of great passion for us, debanking. And note I said debanking and not de-risking, because we have instances within the sub-region where mainstream financial institutions are not recognizing the critical role that these small credit unions, like those in Anguilla and Montserrat, play in terms of bridging that divide for financial inclusion. We would like to call on the financial institutions and the banks to play a greater role in bridging that divide and working alongside the credit union, just like how the birds work with the cows. We can find synergy if these financial institutions can find ways to work with the credit unions, because the role that these credit unions play in these institutions and all areas of the OECS really it's critically important. So we need to place a serious emphasis on the risk of the banking. And this is not the banking by corresponding banking relationship. This is the banking by mainstream financial institutions in the OECS space. So we need to ensure that we consolidate that interaction between the credit union and banks, and we ensure that we work together in harmony to ensure that we not only provide and amplify access to financing, but we protect the space that we have. In terms of credit and interest rate, that was spoken about earlier, so I would not get much into it. But we too, just like other financial institutions, we run the same risk to our balance sheet. Strategic and reputational risk, in some cases, the credit unions are perceived to have lacked the responsiveness to the changes in the industry, and our presence on social media have not been so prominent. And in fact, now credit unions are having to raise profiles on TikTok and Twitter to be able to readily engage with this growing population of this growing youthful and very important population. In terms of some of the challenges that we face as a sector, access to liquidity support is one of them, but we so far, and I think that is testament to the resilience of the movement, testament to resilience of the governance and the regulation of the sector. No credit union has really had to seek outside of the confines of its movement and economic space liquidity support. We continue to be concerned about the access to corresponding banking relationship. We welcome the introduction of newer banks. We also look with a level of concern of strategic risk and concern of the consolidation of the sector. Of course, there are benefits to be had from the consolidation. We also need to watch at what the consolidation brings in terms of strategic risk to the sector, and even more so to the credit unions. We need to put a specific focus on that area. We also look at the regulatory burden that are increasing. We have an excellent relationship with our regulators, and we're also urging all the other movements and credit unions to also have a similar relationship with the regulators to see how is it that in the matters of forbearance and easing of regulatory pressures that we can work together to protect the sector, but not to make it unnecessarily burdensome for our members and our members, that is in terms of credit unions, to be able to comply with those regulatory pressures. Challenges again, economies of scale. In terms of operational cost, how do we scale our operations? We're looking at more leaner credit union operations, and you can see over the last couple of years, whereas financial institutions have pulled out of certain areas in our jurisdictions, the credit unions have actually been expanding into these underserved areas. And that is why it gives me so much passion when I speak about credit unionism and credit union movement, because whereas we go into the areas that in some cases mainstream financial institutions do not deem to be economically viable areas, and we provide that, we absorb the cost because we want to provide that critical support and financial access that is needed for our membership. Access to affordable technology, my predecessor spoke about that, my fellow panelists spoke about that. We too have the same access. For example, here in Dominica, only one credit union offers international debit card of the 6 credit unions. And you can see that across the region. So our level of digitalization footprint is significantly lower than our competitors and collaborators within the sector. And this is, again, an area that we're looking to see how is it that we can improve on. Board leadership and engagement, the aspects of governance is also a critical factor for us. And we continue to place specific emphasis in this area as to how do we improve governance within our sector, because it is not only about the market, but it's also about the leadership. And then finally, in terms of the challenges, is the perceived lack of relevance and visibility. We have had to, like I explained earlier in the equation about the egret and the cow, we have had year and time after time to have to explain why we are here, the purpose for which we serve. And this is something that we have to grapple with. The leagues have to grapple with. The credit unions have to grapple with. We have to rid ourselves of that notion of a parasitic financial institution and really be seen as a critical player by governments, by banks, by MSBs, by other financial institutions, because we serve a critical mass of the population. And so with those challenges, we have not given up on the resolve, and we believe that the reality that is being faced with the credit union is pretty much different from the reality that was 60 plus years ago. And we believe that the future of the credit union will depend on how we adopt different technologies, different loan practices, how we look at the existential threat from rising competition. Credit unions generally can't compete with mainstream financial institutions in terms of interest rates. So we need to look at how we can change our levels of service offerings to remain relevant and to remain competitive. And so our focus must now move towards investing in innovation and using that as a key deliverable to driving our strategic ambition. And so for us, as a way forward, what we call a 4C, not to be confused with a company in St. Kitts. We call it 4Cs: cooperation, coordination, capacity, and capability. In cooperation, we must collaborate. And not only credit union with credit union, leagues with leagues, but also credit union with financial institutions. Like, for example, we have started discussion with some of our financial institutions as to how we can collaborate in the area of compliance, because compliance is everybody's business. So how can we collaborate in that area? Coordination, how can we have sensible regulation in the sector? And I oftentimes, and most of you would have heard me before, I often make the case about a truck and a car, how we do not regulate based on the fact that we all have four wheels, but we regulate based on the purpose for which each of these vehicles serve. So we continue to advocate for sensible regulations. We look at capacity. How can we build local talents and leadership within the sector? My predecessor spoke about attracting talents and how the talent market, the labor market is shifting at an alarming rate. And then we look at capability. How can we enhance cross-border cooperation and interoperability? So these are the four areas that we think are going to be critical ingredients or critical areas of focus for us to focus as we look at the issue of driving financial inclusion and within the space, and how we can ensure that the credit unions remain not only relevant, but competitive. Thank you.
Thank you very much. Again, 19 minutes. I'm in the all-time listening to perfection. So this is excellent. And so we had two, profound presentations. And if you look at it, there's some similarities in terms of the challenges. There's some similarities in terms of the way forward and in terms of the focus. I have my own questions and comments, but I'm going to open up the floor first to the participants, if there are any questions, any comments for the presenters, and then I will give my views. Do we have any questions? Okay, good. Great. There's the first question. Oopsie daisy. Okay. With the looming recession in the U.S., which is predicted to be mild or moderate, consumers and customers will be preparing for a possible recession. How can we stay resilient with uncertainties? So the question is, with looming recession, how can we stay resilient with uncertainties? And I would address that to both of you, but Joanna, take the first take at it, and then we will pass on to Phoenix.
Okay, thank you, Governor. Thanks for the question. I think the COVID pandemic taught us a lot of things. It taught us to be resilient. It taught us to be flexible. And we saw a lot of cooperation, both from the regulator in terms of being flexible with amending regulations as necessary. So I think a number of players would have to come together to be able to resolve that issue. It may mean that we may have to reintroduce the moratorium, the whole moratorium initiative that we had during COVID. And I must say, though, most of the customers who had taken the moratorium have resumed to paying back their loans, and we saw very little fallout from that. So I think these are some of the things. I think we already have a framework in place, because I think one pandemic is no different from another pandemic or epidemic. And I think COVID was a good test run for us in that sense. So I think, yes, we have to discuss it and probably come up with other initiatives that we didn't consider not appropriate or relevant to COVID. But there is, I think, a template that we can use if that were to happen.
Thank you very much. And Phoenix, please, your take on this question.
Very, very good question. Very good question. What we've seen in the sector is credit unions have positioned itself as being recession-proof. And this is premised on a couple of factors. One, the collaborative nature of how we do our business, the fact that we are heavily entrenched in the village and the communities that we serve. So there's a greater sense of, if I may say, patriotism on the part of the credit union sectors and the members. And so we see that as part of how do we help. It is not about what the credit union can do for you, but how the membership can also help the credit union to help themselves. So we look at that. Ms. Charles spoke about forbearance. This is critical. And we must, I know our regulators have come in for flat. We must also give them some flowers. Over the last couple of years, particularly in the case of Hurricane Maria in Dominica, and also in the advent of COVID, we have seen how our regulators, both from the banking sector and the credit union sector, they've come to the fore, and they've shown us how they can use the letter of the law and the rules responsibility under their care to assist the sector in assisting the recovery process. So we must give them kudos for that in that department. The other way in which we can also retain our level of resilience and how we can develop a sort of recession-proof model is by how we become flexible and innovative. So Charles mentioned it earlier, we cannot let a disaster go to waste. And every disaster that strikes, we need to ask ourselves a critical question. What lessons can be learned from it? So Hurricane Maria taught us about building back better, building back resilient infrastructure. So the insurance company learned a critical lesson about, reinsurance, the importance of reinsurance. The banking sector learned a critical lesson in terms of having evaluators of those properties, have them doing constant evaluation, every 3 periodic evaluations. So every time there's a disaster, we need to ask ourselves what lesson. In the case of COVID, we learned that, hey, if we're going to spend 2 years without having in contact, do we have an alternative mechanism by which the members can use? So that is how we start to improve our digital and technology channels. So this is all part of it, how we can develop a recession-proof model for credit unions and for the banking sector by ensuring that there's constant communication with the regulators, by ensuring that we keep our ears to the ground with our membership, by adopting digital and technological advancement and practices within the sector, and by being open to innovation and adoption.
Thank you so much, both of you, for these answers. There is a comment. The free movement of persons is a key pillar of the CSME and is necessary for the region to leverage our collective expertise to achieve sustainable growth. And I think that comment, it confirms or it supports the arguments that both of you have made in terms of the need of collaborations, coordination, greater synergies. And as you said it, the symbiotic relationship, strengthening and deepening that. And I really love the symbolic example that you use with the cow and the egret. We got it. And there is a question or comment now for Joanna Charles. The great point about the inefficient labor markets. There are large pockets of unemployment among graduates as well as mature professionals in some member states and scarcity in others. The problem of inefficient labor markets in the community is often ignored but must be addressed. And so that comment was specifically sent to you, Joanna, for your comment. Joanna, you need to unmute because we're not hearing you.
Oh, I seem to be doing that a lot. But anyway, I was saying, yes, in some markets, I agree that there would be some excesses. Like in St. Lucia, there seemed to be an excess in certain areas, and maybe in a country like Antigua, where the population is smaller, you'd probably have some challenges. While that may be so, I think when jobs are advertised, I think, as if anything else, there's a process. You look inward, you look in-house first, then you go to your market, and then you put it out there to attract the best candidate for the job. And I think to a certain extent, to a large extent, I would say all the banks are doing it. The challenge some of us may have is probably, you have higher cost of living in some islands than you have in others. And sometimes the pay that, for that job may not necessarily be attractive enough to be able to accommodate some of the costs that would be incurred. For example, here in Antigua, Anguilla, and some of the other northern Leeward Islands, the cost of accommodation is a lot higher than a market like St. Lucia. So, we are aware of the challenges, and as much as possible, we do go out to the market to attract the best candidates if it becomes difficult to get somebody internally or even within the market that you operate. So, so these are things we do take into consideration.
Thank you for that. Okay, there's a second question, and will be addressed to both of you. Have we made any inroads to capitalize on shared services to help reduce the cost of financial services to the customer? So I'll just repeat that. Have we made any inroads to capitalize on shared services to help reduce the cost of financial services to the customer? In essence, any collaboration to share costs?
Yeah, okay, I can go. Recently, we were working on a shared service project for risk and compliance. And we hired a consultant to undertake the project, do the analysis, provide some recommendations and so on. But what we found was that what was proposed did not necessarily result in a cost reduction or efficiency or anything that was different to what we already did. So we had them to go back to the drawing board. Now, the thing about that is that there are other components of it that are necessary to make it work. It's not just the banks doing it, but there's a role for the various governments. Now, a lot of the banks have adopted the whole DigiGov concept now that, I was so pleased when I saw an email telling me that my driver's license expired, and that's in St. Lucia, and that I can, initiate the process of getting renewed online. I was really pleased when I saw that. And I'm saying, how can we use that same technology to give banks access to the government's network to get updates on things like driver's licenses, because that's the best place to go to get that, and in real time. And some of the islands are a lot more advanced than others. But I think that's one area that would greatly assist in achieving at least that objective of becoming more efficient, especially on the account opening side that the governor spoke to earlier, and asking customers for 2 pieces of ID or 1 piece of ID or not having ID. I think almost every citizen has some form of ID that the government has issued. And if you can get access to that, there's no need for us to constantly, upload those documents as a customers to bring it. So if you can get access to it, I think that's one. So I think there's a lot of collaboration that's necessary in that regard. There are some other projects, and I alluded to earlier, that now that the ECCU Bankers Association now have a strategic plan, and I think that is a key priority, strategic priority in the strategic plan, that we work together on developing those shared service projects that we can all benefit from. So I think, yes, that's something that if we didn't pay too much attention to it before, I think going forward, we've recognized that we don't have much of a choice to do so.
Thank you, Joanna. Phoenix, your input on this question, please.
Yes, absolutely. I totally agree. If I could holistically endorse everything that Joanna has said, I think that she made a very excellent point of that. Shared services is really part of the ethos of cooperating among cooperatives. And that is why, for example, I'll give you an example of how shared services have helped us in the sector, even here in Dominica, and also you can see examples in St. Lucia and the other cases, where, for example, we have one credit union with a BIN or debit card, international debit card. However, that credit union uses shared services to provide a card, which is local card, for two other credit unions. So they don't have international debit card, but they have their own branded card, which their membership can use at any one of the branded ATMs around Ireland to remove money. So instead of having to now invest themselves in a critical infrastructure that the larger credit union already has, it can now use shared services as a means to leverage those services, increase viability and visibility, and still reduce costs. So for us, there is no way to go, as like you said, individually we can walk, collectively we can run. So if you're not collaborating, then you are clearly defining for yourself. I remember the governor said in a presentation, he says, if the forces for change on the outside is greater than the forces of change on the inside, then the end is near. And for us, surviving, we cannot survive as an island. So shared services and collaboration has to be part and parcel of how we do business.
Chair, if I can go back though, just to add that 4Cs is one of the, I think one of the most successful shared services projects that we've undertaken jointly, where back in the day we were not big enough to apply for principal membership from Visa and MasterCard, and we came together to form that company, capitalize it, and 4Cs is now the processor, our credit card processor in the region. So I think it, that is a very good example of a shared service. Yes, we have some challenges, but I think if we can continue with that model, of course you have to improve it as time changes. I think it's something that we can always go back to as probably a blueprint for some of the areas that we want to explore.
Thank you very much, both of you. There is a third question. I note concerns of the regulatory environment, but how strong is the governance arrangement in the credit unions in regards to oversight and accountability based on its structure? So in essence, is the concerns of the regulatory environment, but how strong is the governance arrangement in the credit unions in regards to oversight and accountability based on its structure? Phoenix, that's for you.
Thank you. This is actually, and I think I prefaced it in my presentation, this is actually the single largest concern that we have in the movement. We have benefited over the last 6 decades from talents who have come to the credit union voluntarily and offer their services. And whereas for the other financial institution, they serve to get a stipend or to get a salary, in the credit union movement, they don't get anything, it's for free. One of the concerns have been for us, and that is why we've been engaging the regulators and even engaging the credit unions at the level, is how can we strengthen the governance? And we do appreciate at this point in time that it is not where it should be. But we've not given up on it. We're working assiduously to ensure that we can enhance the governance. And a couple of things that we've been looking at is how can we increase capacity building in the sector to ensure that all our volunteers are trained, understand the basic rudimentary of analyzing financial information and duty of care and making critical decisions as it relates to the day-to-day running of the operations, understanding the demarcation line between board responsibility and management responsibility and supervisory and compliance committee responsibility. So these are the things that are really keeping us up at night. Other than the macroeconomic factors, governance and compliance remain the single biggest obstacle or the single biggest concern that we are attracting. And that is why we have, for example, we're collaborating with the Confederation of Credit Unions to see how we can have the governance training for the directors, management, and those people in governance at the credit union, so that we are hoping that by increasing capacity building training, that we can enhance how we do business and how we govern the institution. So yes, I do concede that we can do better. We can do better, and we hold ourselves in high regard. And that is why we've taken concrete steps to improve. We're working with the regulators. We're working with our partners to see how we can improve. So yes, we must improve. We're not where we should be. We're not definitely where we want to be. But one of the things we've also looked at is the model that we've adopted in terms of how we attract talents to the credit unions over the last 60 years. We have to take a critical step now and look and see whether that is going to be able to sustain us for the next 60 years. Now, we want to tweak and change a few things, but we have to be mindful to stick to the purpose for which we were created. So that is why it is something that is attracting the attention of the individual boards at the leagues level. It's attracting the attention of the regulator, and it is something that is even attracting the attention of the ECCB. And we're hoping, we've had great dialogues with ECCB in terms of what the ECCB is looking to do with this harmonized credit union regulation, to see how is it that we can bridge that divide and enhance governance in the sector. So yes, we can do better, and we will do better.
Thank you very much for this. In fact, governance is really critical, and you did stress on it even in your presentation in terms of one of the challenges for the credit union movement. And as I speak here, I'm in the Eastern Caribbean Stock Exchange. Joanna earlier spoke about the ECCU, and maybe there's a role for ECCU, say in wealth creation and going forward, and even a junior market. But the ECCU also has a very internationally recognized director accreditation program, and maybe you'd want to have some dialogue and collaboration and coordination with ECCU as part of strengthening that governance structure within the credit union movement. There is another question for you specifically, Mr. Battlefield. Would it not be easier for credit unions accessing liquidity support, a lender of last resort, capacity building, regulatory oversight, if they collectively assimilate under the banner of the Eastern Caribbean Central Bank? So in essence, what the person is asking you, would it not be for the credit unions best if it's assimilate under the banner of the Eastern Caribbean Central Bank?
And this is the example of a loaded question.
It's very loaded.
Very loaded. Listen, there are a lot of moving parts in this debate. We have never been adverse to being regulated at the regional level or at the national level. Our position has always been that sensible regulation should be attracting the attention of the sector. Now, whether it's under the ECCB, whether it's under the FSC, or whether it's under our local regulations, we have to have attendant responsibilities in that department. There are a couple of things that we also need to factor in. So it is not just about who regulates, but also how we are regulated. That becomes the critical conduit to how we arrive at which is best for the collective good of the industry. Now, we have made the case to the ECCB in consultations. We've made the case to our local regulators that the preservation of the historical importance of the credit union is of paramount importance. And if that can be best held or maintained under our local regulators, then we're prepared to work. If that is best held and maintained under a greater umbrella organization, then we are prepared to work. But one of the things we will continue to advocate for is to ensure that there's the preservation of the historical importance of the credit union and the reason why we came into existence and the unique purpose which we serve, which we have served and we continue to serve. So it is not necessarily for us to determine who is the better regulator. We, as a responsible financial player in the sector, we're prepared to work with whomever the governments and the powers that be designate as the official regulator for the sector. Our only concern is that we are regulated understanding of our purpose as egrets in the sector.
You sure you're not a cow? You're just focusing on this egret there, eh? Credit union will maybe one-time egrets, but now they may be cows. And so, yeah, because some of the credit unions are, in fact, bigger than some of our banks. So we have to now begin to look at it even in a bigger sphere, that, yes, maintaining the purpose. But in the question of it, the growth and the expansion of the credit union, I think it calls for wider discussion in terms of not just who regulates us and how we are regulated, but even in terms of the growth. Going back to your question, how can we still best serve that purpose, right, recognizing the changes that have taken place? There is another question for all panelists. Is it fair to say that the credit unions are now morphing into the community bank model and the ECCU banks morphing into the US-type big banks? If so, to what extent is there an urgent and important need for the ECCB to advance the regulation of the credit union sector? So that this question comes back in a different way. So that seemed to be the theme here now. So are the credit unions morphing into community banks? Are they really banks now, rather than just credit unions? And are our banks now morphing into these big banks, given the consolidation in the banking sector? So if so, to what extent is there an urgent need for credit unions to be regulated by the ECCB?
Can I ask Joanna to go first on this one?
Okay, and then Joanna, they want you. Please go first.
Okay, no problem. I think there's Brett King who said banking is necessary and banks are not. So I think the critical thing there is satisfying the need, and the need is for customers to have access to banking services. Now, to the extent that banks are morphing into U.S. banks, I don't see that. A lot of the services we provide are very basic in nature. If you look at the U.S. banking sector, they do not have a fixed minimum savings rate. We do. So their market is, different to ours. Yes, there might be some products that we've begun to offer, and what are they? Mutual funds that, we're still behind on that. We have Trinidad, Jamaica, and these other islands way ahead. We're probably just getting into that sphere. I don't know, credit cards, our rates are quite competitive. I mean, I'm trying to think about the question. Maybe the person asking the question probably need to be a bit more explicit. But I think in terms of regulation, I think the regulation, is at, or moving towards, I would say, international standards. And there are a lot of international benchmarks, and justifiably so. I mean, when we look at cybersecurity, we all exposed to cybersecurity and the risk of not having proper risk mitigation framework in place. So yes, I have no issues with the regulator taking a position on setting some standards for IT. And there are whole other areas that and the thing is, whether you want to kind of like start to, delve into those other the international markets in terms of the products, or giving customers 24-hour access to products and services, we all face with the same risks, whether you want to or not. And customers are demanding a lot more from the local banks than we probably at a stage where we can provide. And there are things people are saying, but how come I cannot do that? And they don't compare you with First Caribbean or, say, another bank. They compare you with Bank of New York, and they say, I can do that with my account of Bank of New York. Why can't I do that? Why can't we have Zelle? Why can't we have this? Why can't we have that? So the demand is there, and we've been forced to play in a market that probably we are not structured to be able to play in that market as yet. So I think there's a lot of transition that's taken place, whether we want to or not. Whether the credit unions are having the same challenges. I'm just, kind of stepping over into your little areas, your area as well, to say that, yes, customers are demanding things from you that you probably need to be in a position to be able to provide. So I think that's where we are. We all doing catch up at this stage. I think it's a global market. As we have seen what happens in the global environment, it impacts us. We've all in some way or the other been subjected to ransomware, some type of cyber fraud, and so on. So yes, maybe if that is how morphing into the international market, that's a description for it, then I'd say yes, it's happening. And the regulator, of course, needs to be able to catch up with what's happening. So whether it is cryptocurrency or whatever it is, I think whether we want to or not, we've been thrown into the deep end. The unfortunate thing is that we're probably not able to do so at a faster rate than probably. I was watching an interview with somebody sent me last night with a young lady, and she said when she went to Holland 10 years ago, it was new for her because back then they had contactless. So you use your card in the metro, you use it everywhere you go is contactless, and we are only just now getting to contactless in the region. So yes, it's a challenge all around.
Phoenix?
Yes, I like the question, but for the wrong reason. This actually defines the road to relevance. Ms. Charles mentioned it earlier. We are playing catch up. The demands of our marketplace has significantly changed over the last 5 years. In fact, there has been a more astronomical change in the demands and the pressures on the financial institutions to provide specific services to members over the last 5 years than the collective changes over the previous 20 years. And why? For the same reason that Ms. Charles mentioned, people said, hey, I can do that with my Zelle. I can do that. Why can't I have that? That's why we have Emlajan. I can take my card and I can just tap and pay. Why can't I have tap and pay? No, we have to go get tap and pay. I can't have 24 access to my accounts. No, we have to have online services. And all of these things come at a cost. But the thing is, who in this road to relevance determines or rewards who does the work? It is ultimately the customer. It is our members. They are the ones that determine whether you're relevant. So if, for example, And the market is severe in terms of who goes home hungry and who gets to feed. If they perceive you, and particularly with the Gen X and Gen Z population, if they perceive you not to be relevant, technologically relevant, they will not do business with you. And we have what we're, for example, in the credit union movement now, where we become savings institution of choice, but lenders of last resort. We want to be lenders of first resort, but then our credit unions do not have such a high digital presence as the mainstream financial institutions. So we are playing catch up. So it may assimilate to that, but we need to interpret it within the context of the evolving dynamics of the marketplace. Now, as to whether the regulator needs to catch up, the regulator always needs to catch up. Will they ever catch up is a question to be think, because the way the dynamics of the marketplace changes. I mean, who would have foreseen we were talking about Bitcoin and all of these things about 3 or 4 years ago. Bitcoin never touched our shores. All of a sudden, within the last 2 years, we're talking about cryptocurrency and digital currencies and digital wallets and so forth within the space. And our people are saying, a lot of whom reside in the diaspora, they're saying, well, listen, if you don't have this level of service, we're going to go elsewhere. So we have to interpret this within the context of the evolution of the market space. And we also have to understand that no financial institution or no regulator would ever be on par with the market, because it is not the regulators or the financial institution that dictate where the market go. It's the evolution of the persons within the market space, our customers and our members. So it may look that way because the marketplace is dynamic. It's a dynamic environment. And that's why we have fintech company coming in. That's why we have MSBs. We never had MSBs for a couple of years ago, but all of a sudden now we're having MSBs, because just as the mainstream financial institution have to move and create, is like you have this big cruise ship that creates a huge displacement in the sea. Whenever they move off, credit unions are now forced to fill that void. And when credit unions move, the MSBs are forced to fill that void. So that is the evolution of the marketplace.
Thank you very much for those insights. And we take our final comment. We could be here forever because it looks like the field is really active. But the final comment, and it is for Mr. Belfield, and I think it's more of a comment than for further comment, but we'll see. The issue of the banking in Anguilla and Montserrat of credit unions are a bigger issue. For the local banks in the space, we too faced de-risking by our correspondent banks in 2017 and had to source and still continue to source alternative correspondent banking arrangements. Based on our current new correspondent banking arrangements, we are restricted based on the risk appetites of the correspondent bank. We would like you to be aware that both indigenous banks in Anguilla and Montserrat continue to lobby our correspondent banks, banking relationship and new relationships to allow for the onboarding of our credit unions and other affected clients within our markets. So I think this comment is trying to say to you that the banks in Anguilla and Montserrat, the indigenous banks, are still, exploring ways to which they can onboard credit unions and provide even further service and further collaborations. I don't know if you have one take on that before I do my wrap up and I hand over
absolutely.
to Kevin.
I would never spare a thought on the issue affecting our smaller credit unions. And I appreciate the comment by the contributor in bringing some interpretation and additional information to the sector. We also need to be cognizant, and this is the thing that we have made specific reference to. The credit unions serve the same financial space that the banks serve. In fact, a lot of the investments and so forth, our affairs is a bit more constrained by the Cooperative Societies Act and the prevailing legislations. So if we look at it from the context, and this is a discussion that we've had with our local correspondent bank, which we enjoy an excellent relationship with. And in fact, we have actually done, and this is maybe something that the Bank of Anguilla and Montserrat and the other jurisdictions that have a similar situation can do. We, over the years, have worked collaboratively with National Bank of Dominica. So in fact, at some point, they used to provide risk training and AML training to our credit unions because they are also our bank of choice. So collectively, we have worked to enhance compliance within the sector because we see it as our collective responsibility to protect the financial space in Dominica. So, but the question I wanted to piggyback on is that if we look at it from the fact that the credit unions serve the same space or a subset of the space that is served by the banks in these jurisdictions, then it is easier to understand how relatively simplistic it should be to do more business with the credit union. So all I'm urging those financial institutions affected to say, listen, where there's a will, there's a way. And if we make the case for the inclusion of the credit unions, the case will be made. Because risk is not about something ideological. It is real. It is within the sector. And if we're serving the same subset, how can my member base, which is a subset of your customer base, be more risky if we're serving the same base? So that's just a question, pause for consideration.
Thank you very much, Mr. Belfield, for that. I'm going to give you all half a second, 30 seconds, half a minute. So 30 seconds to give you a wrap-up and before we close. Very interesting panel. 30 seconds, Joanna. You're on the clock.
Thank you, Chair. I think, as I said earlier, I think in every crisis there's an opportunity. I think we just have to be ready to be able to identify those opportunities and to take advantage of them. But I think there's need for collaboration. There's need for flexibility. There's need for us working more closely with our regulators to be able to overcome some of those challenges and come up with the right solutions. And as Phoenix said, the market drives, the demand for products and services. So there's need for that level of collaboration, even with the credit unions, to see how we can work more closely together.
Thank you very much. Wonderful. And Phoenix, you're on the clock.
Thank you. Thank you very much. Thank you very much for the opportunity to be here, and kudos to the organizers. Again, from the credit union perspective, and I must reiterate about the symbiotic relationship between the egret and the cow. We have to understand that though we compete, we complement each other. And we, as responsible financial institutions, we serve a bigger purpose. Some of us may be for profit, some of us may be for purpose or charity. But we serve a bigger purpose, which is to increase financial inclusion and access within the space and to protect it. And I believe that if we're to work synergistically with all players involved, MSBs, banks, credit union, regulators, ECB, we can achieve this and we can make this economic space a dynamic one. But we need to adopt the approach as the egret and the cow of coexistence, mutual coexistence.
Thank you very much. That is a wonderful way to note. In fact, I actually had that as part of my wrap-up phrase, that we compete, but we complement. Because when we look at the COVID-19, we all know what it brought, but going forward, what were some of the lessons for COVID-19 for us? We saw the need for financial inclusion, because if you couldn't move and you couldn't get there, but you had to have access. And so that led to digitalization, it led to innovation, it led to the financial sector really coming together. But as we go forth, we see the need, as you say, the market is demanding more. And can one institution do it alone? Almost always the answer is no, because the cost is too high. And so the whole need for collaboration, the need for coming together. COVID-19 also saw, and we saw, and that is maybe one of the great advantages of COVID-19, a greater collaboration, coordination on working of the regulators and the regulated across sectors. We saw an expansion of even the inclusion or greater effort to include the credit unions and even other non-bank financial institutions, recognizing that that is important for, if you look at the strategic objective of the ECCB, one of it is payment modernization and financial inclusion. But all of that sits right back to what is our key mandate: financial stability, economic growth. And the financial sector is one of the biggest sectors for leading and spurring that growth, because it channels the resources one of the largest mobilizers of savings is the financial sector. Social Security in our region is the largest, but followed closely by the banks and other non-bank institutions. And the question becomes, and Joanna raised it in her presentation, is it just savings for savings' sake? No. We actually have to move beyond savings for savings' sake to wealth creation. Because again, one of the key lessons from COVID-19 going forward is the importance of wealth, importance of having more than just a nest egg, importance of at least truly really working towards having at least a year's salary so that you can, if a crisis comes, you are able to manage. Great, and again, something else, and Joanna said it, Belfield also said it, in terms of greater understanding of the needs of the people you serve so that you can truly meet the needs of your constituent. And I want to thank you both for your fantastic presentation, but also in terms of your engagement with the questions and comments posed by our participants. And a big thank you to the participants for truly being engaged during these presentations. And with that said, I hand over, well, we end with that. We compete, but we complement. And let us think of the symbiotic relationship of the egret and the cow. With that, I pass you on to Mr. Kevin Woods, who is going to close us off this afternoon.
Thank you very much, Dr. Henry, for so ably guiding the presentations by the panelists and the ensuing discussions. We are streaming live from the campus of the Eastern Caribbean Central Bank, headquartered in Bastia, St. Kitts and Nevis, and this has been the 4th annual conference with licensed financial institutions, titled an inflection point, what's ahead for the ECCU's financial landscape. As we conclude this morning's transmission, let me thank the management and staff of the Eastern Caribbean Central Bank for facilitating this virtual conference, specifically the governor for his introductory remarks. I'd also like to thank as well the panelists who so agreeably delivered their presentations this morning. Personally, Naomi Deali, Shari Joseph, Randy Graham, Joanna Charles, and Phoenix Belfield. I'd also like to thank the moderators as well, D. Tracy Polias, the Chief Director of Policy, and Dr. Valda Henry, the Deputy Governor, both of the Eastern Caribbean Central Bank. Finally, but by no means least, I'd like to thank the unsung heroes, those who are behind the scenes, behind the cameras literally. In this regard, I'd like to thank the management and staff of the research, statistics, data analytics, management information systems, and corporate relations departments for their unwavering support in leasing their staff to facilitating this transmission. We certainly hope that you found this virtual conference useful in providing some preview of the necessary institutional and regulatory responses by the financial sector, given the current financial landscape. I am Kevin Woods, your chairperson for today. Thanks for staying with us, and we hope to see you sometime next year. Bye for now from the Eastern Caribbean Central Bank.